All right. We are
Okay.
live. We are live now, streaming on YouTube. So, Josh, go ahead and introduce yourself and let us know what you're doing and where you are.
Well, welcome back to the Beat the Odds podcast, and I'm at live from the Dubai Mall. I'm outside of Play Dubai here, and they got this pretty cool display, and you can see it's a pretty happening place on a Friday. This thing will, unlike some of the malls in Canada, this thing will be going till 1 o'clock in the morning here. People walking around the mall, looking at the light show of the Burj Khalifa and stuff. So it's a little different energy here. So, but yeah, I'm
Yeah,
glad
what
we're
what time is it there?
Um, it is so it's a 10 hour difference here. So we're at about 6:30, right? 6 o'clock here. So
Okay, nice, nice in the afternoon. Okay, so let's get into it. What are we talking about today?
well, I think we're gonna pick it up there where we left off. I think it's the weeks of median wages to buy assets. So this entire podcast is about helping Canadians beat the odds at building wealth in Canada. So if you want to pull that one up on the screen there, Trevor. I
For
think
sure.
last time we finished with the employment update, which was interesting decrease in the wages in Canada. First time in quite some time actually where wages have decreased in any meaningful way. So
Yeah, all right. Yeah, your audio
there we go.
is acting a little bit funny, but I think it's okay. Just speak loud and clear, and I think we'll be all right. Okay, I've got
Okay,
it pulled up here. So which one did you want me to start with?
scroll on down to the weeks of median wages. Just right in there. Weeks of median wages to purchase assets in Canada.
Sorry. Median wages. Ah, here we
Right
go.
there.
Got it.
Okay. And and this is kind of at the heart of it, where we're always how do you beat the odds of building wealth in Canada? We have to understand that no matter what we do, the value of our hour goes down in relation to the desirable assets that we want to buy. Whether we're talking about gold or we're talking about stocks or we're talking about real estate or we're talking about Bitcoin, whether you're someone who earns minimum wage or median wage or average income or 1% threshold income, whether you lay bricks or whether you're a doctor or a lawyer, the value of what you do every hour goes down in relation to the assets that you want to buy. And that's a harsh realization. And most people don't understand that. And a lot of people will speak out of anger when they hear that and they think it's just their wage or their industry or their income bracket that's susceptible to. But that's really how the monetary system is devised. And so in this case, that's why I post this every single month. And it might not be the one that gets the most engagement, but I post it because this is the actual spirit of the issue. It's like, the what tends to get the engagement is you get just getting people riled up. If you show them a change in unemployment or a change in inflation or something regarding the bank, and it's very clickbaity. But the question is like, what do you do about it? What do you have to do is you have to take that fake money that we earn and actually buy real assets. And we look at gold, and I always look at this on a 25-year roll because most people are they're making financial decisions based on what's just in front of them right now today. But they have to understand it's like you need to make long-term decisions. And so if you look at just an ounce of gold, a year ago, you could have bought an ounce of gold with 2.4 weeks of median income. Today, it's 2.8 weeks of median income in Canada. You know, go back 25 years, you could have bought an ounce of gold with zero point 0.7 weeks of median income. So if not even a full week of wages, you could have bought an ounce of gold. Now it's 2.8 weeks. And
Yeah, I
and
guess that
this
sorry, I was just going to say like the one thing that makes it difficult for people to wrap their heads around this is it's not getting any easier, right? So if it takes 2.8 weeks, then it's just going to continue going from there. Maybe in another year, it could be 3 weeks of median income. So our wages are not keeping pace with the rate of inflation and the cost or the price of these assets. So I mean, for someone like the out there who might be listening to this and saying, okay, you just need to buy assets, like, how can they how can they, justify this, and how do they reconcile or square that circle in their mind?
Well, they have to understand. They think that, like most people, they're looking at short-term trends, and they're worried that the price of gold might go down over the next year, 2 years, 3 years, stock market or houses. And you know that could be the case. Yes, that can be the case in any asset class in any market. But what they usually end up doing is that fear causes them to be out of the market for long periods of time. And inevitably, this is always, you're not going to look back in 25 years and be able to buy an ounce of gold at the same price. It doesn't matter what the price does tomorrow. But in 25 years, it's like it's going to be very certain. And I use 25 years because when you buy a house, you buy a house with conventionally you buy with a 25-year mortgage in Canada. Sometimes it's a 30-year mortgage. And so that should be the baseline of decisions that you're going to buy. And, when I actually buy assets, the tests that I've, put it through, and a lot of people, I've said this to a lot of people, but it's strange when I say it to people for the first time. It's like, is this an asset that I would want in my family for the next 100 years? Like, yeah, if I buy a quality stock that pays a good dividend, if I buy an ounce of gold, if I buy a piece of real estate, if I buy some Bitcoins and self custody, that's a quality asset that I would want in my family for the next 100 years. And at that point, I'm less scared about what interim price projections are because people will get you all riled up about what's going to happen in the market tomorrow or next month or next year, but they're losing focus on what's going to happen. I see a lot recently. One of the most popular posts that I see recently is what the rent price is to your mortgage price. So if you just buy a house today, what the rental price will be as opposed to what the mortgage will be. And the mortgage is more expensive. Yes. And then people will immediately jump to the conclusion that, okay, well, I'm just going to rent, not buy. Well, I got news for all those people. When you buy a house, if you're buying a house right now at close to the top of the interest band, that mortgage price is going nowhere but down over the next 25 years. So that, could it go up? I mean, it could. Likely, no. Likely that mortgage you're going to renew in 5 years at a lower rate than you're renewing today. And then in 25 years, that mortgage disappears completely. Meanwhile, your rent is going up every year, year after year, decade after decade. And
Yeah,
so,
and
I
we
mean, if
looked at
you're,
that last week, didn't we? We looked at how much rent has been going up, and what is the percentage it goes up year by year, or at least recently?
I mean, real estate in Canada has gone up historically by 6%. I mean, that's the number. It's going to be different in different neighborhoods. If you're buying in Kitsilano and Vancouver, yeah, it's gone up more than that in the last 25 years. If you're buying in Red Deer, it's gone up less than that. But overall, as an average, 6%. That's been the number. And so when people are looking at what the mortgage, what your mortgage will be if you buy a house, and what your rent is going to be if you buy a house, the false assumption is to think that rent is going to be the same for the next decade or two. That's not how it's going to be. Okay. And so the goal is to take that fake money and to buy real assets. Now, that's not to say that people need to get themselves overextended to buy real assets, but the goal is to own more real assets than you did last month and more real assets than you do next year. Okay. And so we look at an ounce of gold. We look at the TSX, and again, we always look at this is just price appreciation, which is very important for the people who attend our boot camp because we know that price and income are, the price appreciation, the capital gains, and the dividends are taxed differently. So we want to understand them differently, and what happens in housing, what happens in Bitcoin. And so these are ultimately the four assets that we're trying to acquire, and it's going to be the same story. I would I don't know what's going to happen next year in any one of these asset classes. And all these people, spelling doom and gloom and all of them, the question asked them is like, okay, if you think the Canadian stock market is going down, have you sold all of your stocks? Have you liquidated every single position that you have? If you think the real estate market is about to crash, have you sold all your real estate? It's like, when I find these people putting out the clickbait videos about all the asset prices crashing, is they haven't exited their positions. They're just posting what's popular. Okay. And my goal is to continue acquiring assets in these categories. Okay. And you can see that if you look at something like Bitcoin, for example, Bitcoin 10 years ago, you could have bought a Bitcoin with 0.9 weeks of median income. Now it takes 74 weeks of median income. And Bitcoin's taken a beating this week because the German government has sold a pile of their Bitcoin. But am I? Do I actually care that the German government sold their Bitcoin this week, or what the price is this week, or this month, or this year? So no, I bought the Bitcoin because I want that Bitcoin to be my family for the next 100 years. Okay, if I was trying to produce cash flow, I would buy dividend-paying stocks and real estate that generate rental income. Okay, I think I posted something just today on the story on Instagram. I don't know if you can pull up the stories.
I don't
Maybe
know.
if you go to the profile. I don't know if you've ever done that before, but yeah, click on the just on the purple outline over the Spurrell and Associates there. I
Yeah,
think if you click that, it'll let you see the story, I think. And I've been posting a bunch of
there we
stuff
go.
from Dubai. You might have to go forward or back. I'm not sure. Yeah, I've got to go back. I'm gonna go back. There
Oh,
we go. Right there.
there it is.
There we go. I don't know if you can. Yeah, pause. Yeah, that's what I think about the German government selling their Bitcoin. We're all going to look at that back. When we're 5 years from now, 10 years from now, 25 years from now. It's like that was really silly. Why did they sell all their Bitcoin? Now, did I know last month that the German government was going to sell their Bitcoin? No. Do I care that much? Not really. It doesn't change my conviction in the fact that I want to own the hardest asset on planet Earth. It's the same reason if interest rates spike and the value of my real estate goes down. It's like, well, I had no intention of selling the real estate anyways. I bought it because I thought it was quality real estate that I'm either going to live in or I'm going to run one of my businesses out of, or I can generate rental income out of it. And that was the whole purpose, right? And so, what we're going to look into today is we're going to go through BRICS versus Canada, because I think some people need to understand that we can see the mismanagement in our own country, and we look very critical at it. We don't actually understand that Canada is still a desirable location. When I talk about buying quality Canadian stocks, and we walk people at our boot camp through what sort of stocks that we buy, it's like, we're buying quality Canadian stocks in a country that is kind of well set up to survive mismanagement. And I think we can be very critical of our own country, but ultimately, it's just competition with other countries, and there's not a lot of good examples of very well-run countries. And so let's click on the first G7 versus BRICS.
Sure. This guy right here.
Yeah, and this is our deficit or surplus to GDP, and you can see, way at the top in Crazyville there is Italy and Brazil. Italy's running a deficit that's 7.2% of their GDP. Okay. Meanwhile, probably the scariest thing is the U.S. This is supposed to be the world. This is the world's largest economy. Their dollar underpins the entire system, but they're running a deficit of 6.3% of their entire economy of GDP. That's crazy talk. That's absolute, nuts. And look back last time at the historical precedents of that. You got to start going back to, World War, World War II, before the deficit, the debt to GDP levels. And so when you look at that, you have to understand that they can't grow their way out of that. That's the problem. They can't actually grow their way out of it, because you have to grow an economy at 7-8%. 7-8% are the types of growth figures that you could maybe hope for in a developing country. You go back to the turn of the century in the year 2000. If you looked at China, like maybe China could grow at 5, 6, 7, 8% year over year, but a mature economy, let alone the biggest economy in the world, is just not going to grow by 7 or 8% a year. And that way, we know that the only way out of that position is they're not going to cut the expenditures, because those expenditures are primarily comprised of three things. It's primarily comprised of Social Security, healthcare, and military. And I guess number four now, well, actually number three, it passed military, was the servicing the debt. Okay, so they're going to have they're just not going to be able to outgrow that. And so we know that inflation is going to be the answer. They're going to print money out rather than trying to, tax on an economy that might be, 27, 28 trillion a year, is they're going to print a bunch of money, and all of a sudden they're going to have a GDP of 40 trillion a year, not because they're more productive, but just because at 40 trillion a year, it's easier to raise more tax revenue. Okay, so that's a very key critical figure. And then we start going down the list. France, Japan, the UK, the other EU countries, Germany, Germany versus selling their hard Bitcoin for currency that they could print anyways. It's kind of silly when you think about it, but it's a different story. But then you look at Canada, it's like our deficit to GDP, it's less than 2%. That actually is a deficit. Now, theoretically, you can actually run a deficit that's lower than your growth rate in perpetuity. Now, is that wise? I don't think it's wise. I think it'd be wiser to run a surplus and investing in hard assets and real assets generating cash flow. But theoretically, that'll work probably for our entire lifetime. And so this is the point where we tend to focus on the mismanagement in our country. And when I tell this to people, they think that maybe the first reaction that they have is this guy likes our current government. Like, well, I actually think they're all kind of silly. They're all mismanaged, but at the same time, I have to understand that a deficit less than 2% of GDP is far better than what's happening in the US. And when people just look at the nominal GDP growth of the US and see it that it's higher than Canada, that's only half the story. The other half of the story is the fact that the US is running a much larger deficit to finance that growth. And so if you're really just borrowing more against the future to finance the growth, nothing really is happening there. But then we get to the other side of this equation, and we look at these BRICS countries, okay? And you can see like they're kind of they have the same problems that we have in the G7. Look at Brazil, 8.9%, I believe that is, Trevor.
Yeah, that's 8.9%, and China is at 5.8, and then it goes down from there.
Exactly. And China, the second largest economy in the world at 5.8%. It's like, this isn't the year 2000 anymore. China is the second largest economy in the world. Their population demographic, they're not that favorable. Okay. So their population is aging and it's contracting. And so do I think that China can grow at 6 to 8%? It's like, no, I think they have a problem there too. And so, it's one thing to just to throw stones at your own country, but you have to step back and look objectively. And when people, wonder why I'm buying quality Canadian stocks and real estate and why I think it's a relatively safe bet, it's like, that's one of the reasons why I think it's a relatively safe bet. I look at the valuations, if I'm going to buy something on the US market, the S&P 500, and I'm buying it at 28 times price to earnings, as opposed to I'm buying quality Canadian dividend paying stocks at 14 times earnings. And I also know that the entire system is underpinned by a fiscal situation that I'm not happy with, but at least it's tenable. And I think that's what people have to understand. But then you start going down through the list and you see the one outlier. And the outlier that you see is the UAE. They're the only country on this list that's running a surplus. They're taking in more revenue, than they're spending. Okay. And you look at, sometimes people think that, maybe that you're living in some sort of third world country. It's like, you're not. There's a reason why I'm here. There's a reason why, I've chosen to set up our foreign subsidiary in the UAE is because things work here. They work really well. It's very safe. When I have a problem buying real estate in the UAE, I have no problem at all buying real estate in the UAE. I don't own any yet, but that's probably more akin to the fact that I'm just very bullish on Bitcoin at this time. With that becoming an institutional asset. But for someone to set up, when I look at people, I'm going to leave Canada and go to the US. My question is, well, why? It's not more tax efficient. They have a higher GDP today, but by all indications, it's just because they're running a huge debt. And so, I don't know, Trevor, the boots on the ground, Do you think a lot of people actually understand that?
No, I don't think a lot of people really do understand, what's going on with the whole financial thing, especially the deficit to GDP. Like they don't know what's going on. They think that the US is so much better. Okay, maybe in some ways it might be easier to earn. They're taking less of your income, kind of. Um, but in Canada, like we have, really oppressive taxation, in my opinion. We're at like 43, 46%. And that doesn't include all the general taxes. So it does make it more difficult to purchase assets like gold, Bitcoin, real estate. But I think people should do what they can to get started purchasing those assets as soon as possible. Like you said, even if it's $100 a month, start doing something. Get some Canadian dividend paying stocks, and if you get a decent enough tax return, like if the government took too many of your taxes over the and you get that return at the end, you should take that and invest it wisely rather than just spending it on things, right?
Yeah, yeah. Let's look at some of the comments there. So
Sure.
someone says, can someone please explain to me what this slide means? Not a dummy. Just don't understand the message. This is basically the deficit. So, the government's expenses over income. So their expenses are greater than their income, and taking that deficit, that shortfall, as a percentage of the entire size of the economy. And that's what that means. Scrolling down, what else we got there on the comment
That is the only one there.
on that one?
Oh, there's
Okay.
two replies. So we've got a
We got some
reply. So
replies there.
you replied, tune into the live podcast. So here we are.
Yeah.
And then
Yeah.
another one said, Big Ranch 88, pretty much every major economy spends more than they earn. So maybe one day the Ponzi breaks. LOL.
Yeah.
Except,
I mean, the, all roads lead to inflation. And, people who have been around me long enough, I think all roads lead to Bitcoin eventually, but that could be a very, a very long term. But I mean, all roads lead to inflation. I don't think that's as uncertain as all roads leading to Bitcoin. All roads do lead to inflation, and
yeah,
there's
let's
really
talk
nowhere
about
to
that.
hide.
Let's talk about the UAE for a minute. So what is their income derived from? Because a lot of people are under the misconception that they're oil rich like the Saudis. Where's their revenue coming from?
So anyone who spent their time there, so they do have oil reserves, and they do produce, a lot of oil when you look on a global scale. But it's a much smaller percentage of their revenue than people think. And so they derive their revenue from, they have a sales tax. So there's a VAT, the value added tax, which is akin to our GST in Canada. And then there's user fees. And so for anyone who's set up a company in Canada knows it's a couple $100. And anyone who's set up a company in the UAE or in Dubai knows it's a 5-figure setup fee, right? And so you're talking 10 or 20,000 bucks to set up a company here, and so it's essentially a user fee that's happening. But then
Isn't, sorry, go ahead.
the biggest component for revenue that I think a lot of people are missing is real estate. They have to understand it's like the there's a tremendous amount of housing being built here, and the government has their hand in the major developers. They either own the major developers outright or they own a share of that developer. And so every time someone buys a piece of luxury real estate, they're effectively, adding to the government coffers. And it's different than you'd see in Canada, where in Canada the government's involved in the social housing, the low income housing. It's like we're here, it's kind of the opposite. The government's involved in the high end housing, and the private developers are filling the gaps in the lower end places, right? And so people will pay it, and they pay it, willingly, because they're happy with the piece of real estate. They buy it, and a lot of them probably don't even understand that the company is actually owned by the government, and they've effectively, funded the government operations by doing it. And so many would argue that it's a very fair way to do it, because if you don't like it, you don't buy it, you don't pay, right? You don't want to set up a company, you don't pay. It's like they're not taxing your personal income, and so I think it's a pretty fair method of taxation. You're kind of the fruits in the pudding here, right? Where quality of life index is going up, and they're able to run a surplus, and people don't feel like the involuntary means of taxation are always out to get them. So
Yeah, I agree. The proof is in the pudding there with the UAE and how, you just described their taxation. Basically, it's, tax for use. Um, and here in Canada, what they're wanting to do is take more from quote unquote the rich or boomers. Oh, your house is too big. We're going to take some equity from your house now, they're talking about. And taxing more on the top 1% of people. Well, rather than do that, I think taking a look at the UAE's model of taxation and basically making it a consumption tax. I think a lot more things, it would be more fair because what you buy, you pay that VAT tax on. And getting involved in real estate, we have a major housing issue here. So if we actually got our stuff together here in Canada and shifted over to a system like that, I think it would be, very positive move for Canada to do. But we know that we are, led by the slowest moving and the dumbest of the herd, unfortunately. So that's not likely to happen.
Yeah, I think it's that's a kind of a an issue with all Western governments is they have that problem. And I think until the money printer is slowly pried from their hands, I think they're all going to have that sort of issue that they're going to challenge with. I think they have to understand that the actual taxation systems that they have, whether it be personal tax or corporate tax, they're kind of archaic in a global world. They're very much archaic, where consumption tax, user fees, taxes on land, they're actually going to be easier to administer. And it's going to take a while for them to actually understand that these are difficult methods of taxation. But the people with the most affluent means, they have the most means to shift income and assets to different countries. And so I think it's going to take a while for Western governments to before they start to understand that not only maybe it's not working, but the fact that they're probably missing out on a lot of revenue by doing it the way that they're going to. So let's look forward
Uh,
to the next slide, Trevor, and keep rolling on that one.
This one here.
Yeah, so this would be the actual total GDP, and so here's where we're actually understanding that you know the size of the G7 countries versus the size of the BRICS countries. And of course, the US is the largest at 25 trillion. And collectively, they were at 48 trillion there down at the bottom, Trevor.
Yeah, 48.9, almost 50 trillion.
Yeah. And Canada at 2 trillion, it's kind of, it's no slouch. Especially a lot of those countries on that list are significantly bigger than us. And so, we tend to only look right at the US, but we have to understand that the US also has the world's reserve currency. It's actually easier to raise capital in the US than it would be in any of these countries. But 2.1 trillion is kind of no slouch. I don't think a lot of people really grasp how big China is in relation to the US, 18 trillion versus 25 trillion. And India at 3 trillion. Okay. Uh, Russia 2 trillion, but overall we're starting to look at 48 trillion, 48.9 trillion versus 27.9 trillion. And I think before the kind of the fallacy is that these countries, the BRICS countries, need to sell to the G7 countries. But just start looking at the total. At some point, they don't need to sell to these other countries. Okay. That the economic activity is so big that sanctions, for example, will become less and less effective because more and more of the global market is not controlled by these Western nations. Okay. And I think some of the comments start to drill into that. It's like BRICS will take over, but in the meantime, you'll see NATO attempt to assassinate several country leaders in order to prevent the rise of the BRICS. I don't know, maybe. I guess we have RFK, going on TV saying pretty clearly that the CIA killed his dad. So, I mean, I can't say no to that. Do I know for sure it's going to happen? Not for
No.
sure.
Well, when it comes to
Uh,
the sanctions that they put on Russia and these other countries, I mean, that kind of breaks the good faith contract of being the world's reserve currency, right? So if you're
yeah,
just going to steal their assets, then what is the incentive for other countries to deal in your dollars, right? So I think that was a
yeah,
big, they stepped in it by doing that. Because what is
yeah.
it, why are they punishing the Russian people and the Russian economy? Because they're mad at Vladimir Putin, right? It's the people's assets. It belongs to the country of Russia. It belongs to those people, not just the leader.
Yes, it's true. I mean, I'm sure in the short term they look at the sanctions, but in the long term, if that gives up your world reserve currency status because you implement those sanctions. I mean, was that really a good long term decision? Because then it basically diminishes any future sanctions that you could do, any monitoring that you could do. And so I'm not sure that those sanctions are going to have a good long term outcome for the U.S. And so, what was the response to that one? There was a reply on this, and I'm kind of curious.
Okay, so we got a comment here. It
Yeah,
says
but
in there is no
there
reply
was
on
no
this one.
reply on that
No.
one. Okay, we'll go to the next one.
India,
Okay.
Brazil, Russia has by far higher GDP than Canada. The higher revenue at TSX is less than 60 billion. The currency is weak. I don't see a big or strong economy at all. And there's a reply. It says CPA, actually Canada's economy is at 2.33 trillion now and is higher than Russia. Russia has 150 million people. Canada has a population of 40 million. GDP is not a real measure of economic strength. GDP per capita is a more effective representation of that. If you divide the total economy size by population of all these countries, Canada jumps to second place in G7 for GDP per capita. So yes, despite recent issues, Canada's economy is the second most powerful capita in G7 behind the USA. What are your thoughts on that?
Yeah, I mean, a little bit of like, you know, uh, my dad could beat your dad up sort of when I read that. Like, if Russia's 2.2 and Canada's 2.1, it's like, someone's trying to use what Canada's GDP is in Q2 of 2024. These are all based on 2023 for fairness and comparison. If we were to both, I'm not sure. I can look up reliably what Russia's GDP is in Q2 of 2024. Not all these countries have the same interim reporting strengths as they do. So, I mean, 2 point and plus the method of calculation might be slightly different in country to country. So, 2.3 to 2.1, that's kind of statistically the same. Okay. Now, is
Splitting hairs.
GDP, yeah, splitting hairs. And so is the per capita less? Yeah, it is less. Okay. And in some respects, that matters a lot. If you're a citizen of that country, GDP per capita can matter a lot. If you're an investor in one of those countries, when you're buying, you know, for example, like I, I buy shares. I own shares in TELUS in Canada. Okay. So I own shares in TELUS in Canada. But but even people on the lower end of the economic spectrum, they still have a cell phone plan. Okay, so the aggregate GDP for me as an investor in TELUS, the GDP of the entire country is more meaningful than the GDP per capita. Okay, now if I'm trying to sell high-end luxury goods, okay, maybe the GDP per capita is more meaningful. But some people have to understand it's like, okay, and they just want to say, but GDP per capita is the only one you should look at. And other people say aggregate GDP is the only one you should look at. It's like, well, not really. You need to actually understand both because there's some there's some scenarios where one would be more meaningful than the other. Okay, so I would really distrust anyone who tells you that this is the only one you should look at and not look at the other one because there's some scenarios where aggregate GDP would be more useful for making an economic decision in that country than GDP per capita. So
Yeah, that makes a lot
uh,
of sense.
yeah,
Next
let's
one
scroll
here.
down. What else?
The EU is not in the G7 cloud. And he
Yeah,
said the EU
yeah,
is a
there.
non-enumerated member of the G7.
Yeah, I know. Google's your friend. You can just look that one up. It's pretty clear on that one.
Yeah.
So, but it kind of just goes by you just look at the attitude of most people online. It's just like, man,
Next one.
um,
It says, as a Canadian, it blows my mind that we are in the G7. And the next one down there says, Canada has become a joke. Trudeau out.
yeah. I mean, we'll get to some future slides, and we'll see that our GDP it looks good, but it could be so much better. And we'll see some future slides that tell us why that is.
Okay, you want to look at this one now?
Yeah.
All right.
this is population. And again, it's kind of getting at the root of, okay, some people say it's all GDP per capita, and some people say, well, look at the population. Population is meaningful too. If you have a population like India, over 1 billion people, 1.4 billion people, it's like, well, and you have a pretty low GDP per capita. There's a lot of room to grow there. Okay, as opposed to a more developed nation, well, they don't have as much room to move. Okay, and so people just have to be aware of these numbers, and we start to look at, at 41 million people in Canada. It's kind of no slouch. It's in that list, but we're very small in the scheme of things too. When we look at, if anyone who's traveled to other countries, if you've been to, I've never been to India, but I've been to China. And when I got there into China and you get into Beijing, it's like you start to realize like how tiny Canada actually is and how many other people are in the rest of the world. Okay. But you start to look, it's like ultimately the BRICS have more than 3 times the population that we have in Canada. And there is strength in numbers, and there is a higher growth trajectory with that population. And so that's something we have to be prepared on. What are some of the comments there? And yet, only the USA classifies as a superpower. I was like, yeah, that's right. That's a very fair comment by somebody. It's like the US only has 330 million people. Okay, and the economic activity, current military strength is only one component. Population is a consideration, especially on how they're going to grow and what power they'll wield in the future. It's only a matter of time, not a matter of fact. Yeah, I mean, is more power shifting towards these countries? It really is. If someone wants to look at the GDP of those countries 10 years ago, 20 years ago, and compare it to the GDP of the G7 countries, it was a much wider margin. But now, it's very much narrowing. So, hey, scroll down. What else we got that?
Not sure. This is a translation from another language. Where is the Rusna? I'm not sure what that means.
Not sure what that means. Hey,
All
that's all
right.
we got on that one, right? Okay.
Yeah, good on that one. Okay, next one we have is this guy here.
Before that one,
Oh,
but back up. I preface this one with that consumption by source. Okay. Again, people dramatically underestimate how much energy has to play in everything from inflation to the power that various countries have. We have to understand, where nothing happens without energy. And whether people like it or not, the world still runs on oil and gas. Okay. 31% of energy uses. This is not electricity usage. I think a lot of people have had the kind of the wool pulled over their eyes when it comes to energy versus electricity. Ultimately, where does that electricity come from? It doesn't come from the electricity ferries. It comes from somewhere else, whether it comes from natural gas or whether it comes from coal or whether it comes from a nuclear power plant or whether it comes from hydrogen, the hydropower. It comes from a primary source, and these are the primary sources that are really matter at this point in time. It's oil, coal, natural gas, hydro, nuclear, and others. And so all of the stuff that we talked about, the wind farms and the solar panels, are still a very small fraction of the power that's being used on planet Earth. Okay. And so once we understand that, it's like, okay, well, oil is still the biggest. Who controls the oil? But let's see what people's understanding are. Some people are saying, yeah, and we think driving a few EVs will save the planet. But it's very true, actually. Like it's a very small percentage. Even there's a lot of people who probably don't understand. It's like, yeah, they might be driving a Tesla, but if the Tesla's charged into an outlet, and that outlet's deriving their power from a coal power plant, and so
not to mention all the energy that is used to produce that Tesla and to produce the batteries for that Tesla. Like that all uses carbon-based fuels to generate and create that thing.
true. It's small at this point, right? Remember seeing a stat about the total energy of British Columbia. If you convert all the energy sources, yeah, you need 4 to 5 new dams. I'm not sure if that's the exact number, but it'd be pretty significant. And British Columbia is one of the largest percentage of electricity derived from hydropower in Canada, it is pretty large, but they don't, again, it's like electricity is a small way of where we use our energy. Most energy is still, it's still derived from burning fuels. Okay.
Yeah,
Uh,
they get all that lovely natural gas from Alberta that they burn in their turbines to create electricity.
yeah. Nova Scotia has the big three, and Canada won't do anything about it. Start to call 100%. This is, we forget that we're just sitting on a wealth of riches here, and so even when we have the mismanagement that we have, uh, this our country, it does very well because of that. But it just makes you wonder how much better we could do. Right? We need to transition away from fossil fuels. Can't stand it when I hear that. It's like, yeah, it's true. It's like if you just pulled the plug on fossil fuels, most of the world would die of starvation. Well, that's a problem. And so, anyone who wants to transition away from fossil fuels, it's like if they think it's a hard switch, it's like I got a hard reality for you. It's like there's a it would be a very ugly transition away. And so, and we have to look at, the practicality of the means that we have to produce energy. I always go back to there's one meme that kind of said it for me. It's like there's a bunch of guys standing around a pit. There's one guy in the pit, and he's actually the guy with the shovel, and he's oil and gas, and he's shoveling in the pit. And then there's a bunch of guys around the perimeter of the pit, and one of them's biofuel, and the other one's solar, and the other one wind, and they're wearing white hats just looking at the guy with the shovel. And then meanwhile, there's some guy off over there, in the distance, and he's sitting, next to his excavator, and he's nuclear, just sitting around doing nothing. He could actually, do the work, but no one's really calling on the guy. But as of right now, the world's run on oil and gas, and coal is still a large percentage of the way we derive energy on planet Earth, albeit becoming less and less in North America. All right, so we got that one, and then let's look into the ones where here these are the oil reserves by country. It's like Canada is way out in front, way out in front in the G7. In fact, we have more than all of the other G7 countries put together. Okay, and anyone who's and and you start to look at like how much we've explored of even our Arctic. I would venture to guess that we've explored less of our Arctic than Saudi Arabia has explored of their deserts, just because of the logistics of it's easier to explore a desert than it is the Arctic. And spending time in the UAE here, anyone who tells you that plus 40 is harder to deal with than minus 40, like they haven't experienced both. Plus 40 is way easier to deal with. And, if you're out there for a few hours, it can become a concern. But in minus 40, if you're out there even for a few minutes in less clothing than you should be, it's a concern right away. Like minus 40 is way harder to deal with. So exploration starts to become, when you already know that you have so much available, how much economic reason do we have to explore the Arctic? There's probably far more reserves that are actually there. But start to look at the aggregate there. 231, this is millions of barrels. So that'll be 231 billion barrels of oil versus 690, 600 and what is that, Trevor, there? 689 billion barrels of
689,
oil,
yeah.
right?
Yeah.
Yeah. So, it starts to see like we don't actually control most of the world's energy. And if you flip through to the next slide there, I think we posted the natural gas numbers there. And we have the natural gas. It's kind of the same story. The G7 countries actually have a small percentage of the natural gas. Okay. When it comes to the BRICS, 127,989. It's just a much smaller percentage. And so these other countries have a larger share of the world's energy. They have much higher population, a larger share of the world's energy. They're closing the gap on the GDP. And that's just common thread that we're going to see happen over time. But it just reinforces of why do I remain bullish on Canada? It's like, yeah, I've set up an office in the UAE to hedge my bets for sure. And, there's some things that I can do in the UAE in terms of staffing and running my business that I can't do in Canada. We teach a little bit of that at our boot camp, but why haven't I just up and left Canada? It's because Canada's going to do just fine. And I think you're going to see in this transition over the next few years, it's going to turn into the countries that have energy and have natural resources, and the ones that don't. You start to see what's happening in the UK these days. It's like, wow, I've had clients come to us, and they've moved from the UK to Canada. And some of the stories they tell me in terms of taxation and running a business and dealing with real estate, it's like we think we have it bad here. It's like it's so much worse there. And a lot of our counterparts in other G7 countries, it's like they don't have any energy. They're all importers of natural resources. We just have a wealth of resources in Canada that even when we have governments that don't make good decisions, we can actually we're set up to survive. We're set up to survive a little bit of mismanagement. And that should give people some solace that it is really, there's no one government that's going to run us off the cliff in the next 4 years. And so ultimately it comes down to, it should give people the confidence to buy assets for the long term.
Yeah, no, you couldn't have said it better there. I think what we should do, as opposed to firing up the money printer and just trying to inflate our way out of things, rather than do that, maybe we should fire up the production of our resource industry and see how that helps Canada fare in the world markets.
Yes, yes, we're actually in a position to do that. So we look at upcoming elections in the U.S., upcoming elections in 2025 in Canada. It's like the U.S. I'm not sure they have another choice other than fire up the money printer and inflate their way out of it. It's like that's the only way out of. You can't rip 6 or 7% out of the economy all at once. But in Canada, we're less than 2%. You really could grow your way out of that. We only have a deficit of 1%, and so it just makes me, I still acquire Canadian assets where they pass my tests where I think I would want those assets in my household for another 100 years. But obviously, I still buy gold and Bitcoin because those are the insurance policies, regardless of which country you live in, whether you live in Canada, whether you live in a BRICS country. It's like that. Those are the two assets that you can have that are kind of outside of the crazy factor of what your government can do.
Awesome. Well, thanks so much for sharing with us today and visiting us from Dubai. I know you're coming back on your 24-hour plane ride tomorrow, so we'll see you back in Edmonton next week, and we'll be here with the podcast. Maybe sign us off, Josh.
Right on. Yeah, I'm looking forward to being back in the office, and we'll be doing the next one right beside you there next Friday, Trevor.
All right. Thanks, everyone. We'll see you next time.
Okay. Bye-bye.